You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. It is a dangerous world out there. Volatility is on the rise, and your clients' portfolios are under assault from a growing number of threats. Simple diversification is no longer enough to shield the assets under your protection. Registered investment advisors, financial planners, and asset managers need a new weapon in their war on risk. Welcome to the Advisor's Option, the program designed to arm busy advisors with the information necessary to properly manage risk in this volatile environment. From options education, trading strategies and tips, to industry news and interviews, you'll find it all on the Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit orats.com or email Matt Amberson at matt@orats.com. And now, it's time to learn how to implement options in your practice. It's time for the Advisor's Option.
Ooh, the crowd is excited. The people are excited. They can tell something exciting is in the air. Something pretty fun is in the offing. My name is Mark Longo from the optionsinsider.com, as well as, of course, on the Options Insider Radio Network. And why is that crowd so excited? Why is there something special in the air? Because we have a very special episode in store for you today, listeners. Yes, it is the Advisor's Option 100th episode. Spectacular. It is amazing. It is stunning to me to think back when we concocted this way back many years ago, that it would not just reach the extent that it has and the reach that it has, but be running for 100 episodes. It's been fantastic. I do remember a number of years ago now getting roped into doing a very early morning panel at the Options Industry Conference in New Orleans with good old Mr. Mike Cavanaugh, formerly of Know Your Options and now of Resume Bank. He was going to join us on the show today. He unfortunately couldn't make it, but we do have a great cavalcade of guest stars lined up in a little bit here. But we had a panel early in the morning, bright and early, after a very active day in New Orleans. And, of course, it was myself, Mr. Mike, and Randy Swan from Swan Wealth Management. You can kind of see where this is going, listeners. And the takeaway from that panel is, man, there really needs to be a lot more done to service this audience. And so I talked to the folks at OIC and OCC, and lo and behold, this show was born. A little while later, the Swan folks came aboard, and a little while after that, we had Mr. Matt. We had some other fun dalliances in between there. So it's been a fun show. It's been a great one, a great run. And we're really excited to dive into this 100th episode spectacular. And joining me to help me do just that wouldn't be the same without my compatriot in all things advisors option, Mr. Matt Amberson, the principal, nay, the founder over there at ORATS, a.k.a. the Oracle of Omaha, a.k.a. the guy who comes up with all that cool earnings data you guys love so much. Mr. Matt, welcome back to the advisors option, and indeed, congratulations on this 100th episode milestone, sir.
Congratulations to you, Mark. Amazing 100 episodes. I remember New Orleans, but only partially, shall we say. It was a fun trip, and wow, that was a while ago. I haven't heard that Genesis story, so now it all means a lot more to me. But it's great to be here, Mark. It's been something I look forward to. The fastest hour of my month, right here with you.
Well, you're not going to be alone on the show today, Matt. Like I mentioned, we have a cavalcade of guest stars. We were beating them off at the stick. When they heard it was Advisors Option 100, Matt, everybody wanted to be a part. So we have a whole litany of guest stars lined up. What do you say? You think we should hear from the first one now?
Let's do it.
All right, here we go with our first of our cavalcade of stars here on the Advisors Option 100th episode spectacular.
Thank you very much, Mark, and congratulations on the Options Insider Radio's 100th episode of the Advisors Option. What you folks do on this program is really important to help people understand these markets. Anything from so-called short squeezes to hedging specific or general event risk. We really appreciate your contribution to investor education, which is so important to understanding these important risk transfer products. We look forward to many more episodes in the future, and OCC and OIC are very proud to be sponsoring this fantastic program and 100 unbelievable episodes. Very well done. Thank you.
All right, there we go. Our first of many people to join us on the show today. Matt, that was John Davidson, the CEO of OCC, the Options Clearing Corp.
Wow, you really get him in here. Anyway, so yeah, John over at the OCC and gang, extremely important part of our industry. And as he says, Mark, I mean, this is critical to get education out to people. As we learned on the Cirilli study, as I learned through this podcast, listening to the Cirilli study being explained, you need to have wealth advisors use options in their own accounts, understand them by doing, and that's what really leads to people using options and using them not only in their own accounts, but in their client accounts, Mark. So it was great to hear from Mr. Davidson.
And we're not just joined by guest stars. You know, it wouldn't be a 100th episode spectacular, Matt, without also some new bells and whistles on the program. I've been saying for a while, it seems like we have to kick off every episode these days. The markets are so crazy, kind of just breaking down a little bit of what's been happening and what our thoughts are from a options and volatility perspective. So it seems appropriate on our 100th episode to introduce a new segment that is just geared around that. It is time for the inaugural P&L statement.
What the heck happened in the options markets since our last episode? Let's find out with the P&L statement.
How you like that one, Matt? See, all new bells and whistles everywhere. You can't shake a stick without hitting something new on the show today, sir.
Very exciting, Mark. Looking forward to the P&L segment.
Well, speaking of exciting, you've been busy since our last episode, sir. See, you don't just talk to me anymore. I feel like I'm being two-timed a little bit. The word about the Oracle of Omaha is getting out there a little bit. You were quoted in some other public, I'm not familiar with, Routars. I think they do like Rotary. I think they're about plumbing, something along those lines. But talking about this concept, Matt, that I've been hearing a lot of people throwing around out there lately. And I took a little bit of umbrage at this concept. I'm glad to see you did as well. This notion of the VIX is in a bubble and what the hell is going on. Before we even get to that, let me set the stage here a little bit. Obviously recording this here at the end of February, the tail end of yet another tumultuous week, listeners. We saw yesterday, coming off the heels of a massive sell-off in the broad indices. S&P off about 2.5%, NASDAQ off over 3%. Volatility products, VIX and others spiking, pun intended, north of 30 ever so briefly. Coming into today's show, the markets are mixed. We're seeing the Dow off about 1%, S&P struggling to stay unched, and the NASDAQ actually up 1%. So we're in that kind of weird period as well, listeners, where everything is rocking and rolling. Vol is frothy. VIXs are about a 28 right now. So we're seeing a lot of interesting stuff. So Matt, what are your thoughts on what we've seen over the course of the past week? And then what are your thoughts about this crazy notion of this VIX bubble, sir?
So yeah, it's a very interesting concept, some advanced topics, but I think it's good for your listeners to understand a little bit more about the VIX and also a little bit more about, because it's really reflective of what's going on in this market. So, what a lot of people would think is, hey, this VIX is just high and realized volatility is lower and what's going on here? Well, it turns out if you really break it down, VIX compared to realized volatility isn't that high. What's happening and what's driving it is VIX compared to the curvature in the market is what's really driving the VIX. So if you break down, the VIX is based on the options, Friday expirations of SPX around 30 days. If you look at those options, the at the money is not that far away from levels historically about implied to historical. So what's driving the VIX being so much higher than the SPX implied volatility is the nature of the VIX calculation. The VIX uses not just at the money volatility, but every option that has a bid on it. And so that gets to be these very small strikes. And as you've probably been hearing these days, that the strikes in the calls have been bid up quite a bit. And that's, and especially, and obviously GameStop and many other small stocks, but that's spilling over into ETFs and indexes to where the calls are being bid up relative to the at the money, and the puts are being bid up relative to the money. So what's happening is the at the money volatility of the SPX, seems kind of normal, but it's what's driving the VIX to be so much greater than that at the money implied volatility of the SPX is this curvature, or is this additional premium in the out of the money calls and puts. And so then you're seeing a VIX that is, looks to be in a bubble, but, really isn't that much in a bubble. What's really in a bubble are the small calls and small puts. And then, so some theories on that. So obviously we're seeing a lot of retail buying out there, but I think it's more than that. I mean, I think when you have a market that many have termed to be in the bubble itself, you have people that need to participate in the market. They can't. There aren't any other assets out there that are, the bonds are crazy low yielding, and you can't get a good yield in many other assets. So people have to be in the market, but they know it's very risky. They know the valuation's extremely high. So what they're doing is they're utilizing options. They're utilizing they're participating in calls, especially a lot of the retail, especially out of the money calls, and they're participating by being long the index and being long puts, protected puts, because they know all the risk going on. So what's happening is that's really driving up those wings and driving up VIX relative to, what would look like normal levels. But, and then you might say, well, will this persist? And it seems like it should for a while, at least until we get, pretty good correction. I think we're going to see VIX levels, high versus what we would consider normal because of this curvature, Mark.
That is an excellent point. That's one we've been saying for a while. VIX incorporates many different elements, including the skew, and that's been a point of contention of late. That was around some of the lawsuits that swirled around VIX very recently. It's also one of the reasons why other participants in the vol space these days, like NASDAQ, have decided to eschew all of that and go straight at the money with products like VolQ. Now, I think, of course, the skew provides value. I know Matt does as well. It's just a question of how you incorporate it. And the way it's being done right now, of course, obviously adding to a little bit of that froth, a little bit of that bid we're seeing out there in all things VIX right now. Speaking of froth, things are very frothy on the guest line, Matt. I think we got someone else looking to chime in here. So let's have at it with our cavalcade of guest stars here on the Advisors Option 100th episode spectacular.
Hi, Mark. Congratulations on your 100th episode of Advisor Option. It's hard to believe that something we conceived of many years ago has now reached this incredible milestone. Wishing you great fortune in the next 100 episodes of Advisor's Option. Be well. Take care.
That was fun. That's a voice I haven't heard in quite some time. Mr. Alan Gigroletto, he used to run the Advisors Initiative and the advisor team and pretty much all the education over there at OIC. He brought Eric on board. He was Eric's boss way back in the day, and he and I sat down in the lobby. I think it was the Marriott in the New York Times Square there to actually conceive of the show. You know, I had the idea, kind of the genesis from that panel, but the actual conception of the show actually took place in New York, weirdly enough. So this show has a gestation kind of all over the Eastern Seaboard there before it finally came to fruition in the program that we know today, Matt, as the Advisor's Option. So that's yet another of the many folks lining up to be a part of the show with you today, Matt.
Well, Alan, across the industry is well loved and well respected. And I didn't know that. Another new thing about the genesis of the show that Alan was involved in. Of course, I should have assumed that. Alan and I go way back. He's a great guy, and just another feather for your cap, Mark.
This show has many feathers, many, many feathers. Alan, I believe, holding court over there in Italy, overseas, I believe. Now, he's always bugging me to get my dual citizenship in Italy. That's a project for another day. Speaking of projects, sir, yet another new coat of paint here on the Advisor's Option. One of the other popular segments we've had for quite some time. It seemed only fitting on this 100th episode spectacular to encapsulate it in its own segment. Yes, it is time to break down all that craziness around earnings. It is time for the Earnings Volatility Report.
Earnings announcements can move markets, but what is the options market telling us about upcoming earnings events? Let's find out with the Earnings Volatility Report.
Look at that, Matt. 100th episode, you're getting your own brand spanking new segment. How does that feel, sir?
Wow, this is something, Mark.
We're rolling out the big guns. 100 doesn't come around every day, sir.
We have to have more 100th anniversaries.
Everyone who does one of these spectaculars with me, they all say afterwards, we should do that again. That was fun. So, yes, they are fun. A lot of effort, but they are fun nonetheless, sir. So, yeah, you are the keeper of all the earnings data that our folks love to devour, especially at this time of year. Earnings still hot and heavy. I know the macro scene is kind of dominating a lot of people's thoughts right now, but earnings hot and heavy. For the entirety of 2020, Matt, we were kind of waiting for that moment. Would this be it? Would this be the inflection point where the worm turned, where vol would start outperforming? I thought leading into this cycle, this might be the one. It seemed like they were starting to line up a little bit that way. They had crushed the vol enough where we were starting to see straddles lining up with the expectations. That's usually a sign that maybe we're poised for a little bit of outperformance. It doesn't seem like that's come to pass so far, Matt, but catch us up. What have you been seeing out there over the course of this cycle, sir, and how does it compare to previous cycles?
Well, as you said, Mark, the macro events are just overshadowing the individual announcements, and we're just not getting the moves in the stocks that the option markets are expecting. So, there's a lot of built-in premium around most stocks right now. The volatility, as we talked about, especially in the calls, the volatility is high, and people are expecting a lot from these earnings announcements, and then they're just not getting them. We did see a little bit more life, but it's still very anemic. Usually we have 4 winners out of 10 if you're owning options. Now it's still in the 1/3 of the time. We usually are about 100% of actual moves versus expected moves. We're still down around only 3/4 of that move. And, really, it's slightly better, but the pattern's still holding up. I mean, we still see the first 2 weeks of the earnings season, which is generally six weeks. The first 2 weeks, those people that announce don't really beat expectations of moves. The week 3 and week 4 are the biggest ones, and that was true this particular earnings season. But then, as it fizzles out, and just the few stragglers, they usually will pick up, but that has really been the case. And what we've seen is just an earnings season again that has disappointed owners of options. Mark.
Yeah, I'm looking at this right now. Of course, listeners, you guys can get the earnings move reports, which is kind of the anticipated what the market's pricing in. You get the earnings move results report, so you could see exactly how it all broke down. Did it work out? Did it not? And you can even get the earnings season report, so they break down the entire season for you. You know where to go. TheOptionsInsider.com is the place for all. Of course, you can always find it over there at ORATS as well as a lot of other cool stuff. ORATS.com. I'm looking at the earnings season report right now, Matt. And yet again, we had 1 week. I guess we're bucking the trend there. We at least had 1 week where effectively, if you were a premium buyer, you broke even. You actually made a penny, because listeners, they break it down by the percentage terms here. And obviously 100% means you got pretty much full bang for your buck. You paid $1, you got $1 back. You got your vol back that you paid for. Every other week was way less than that. But week 4, you got 101%. So you made 1%. That was it. The rest of the season, blood red, and the average so far, 74%. So it seems like, Matt, despite my optimistic predictions going into this cycle, it seems like we are going to be yet again cursed with a blood red season, sir.
Yeah, and as you said, there's just so much other stuff going on in the market that it is overshadowing these earnings announcements. And, people aren't looking as closely at the fundamentals. And frankly, the fundamentals aren't as important. They're looking at the 10-year rates. There's the duration of investments in this economy is so far out there, meaning, the rates have been so low for so long that people are seeking, longer and longer duration, or another way to think about that is earnings that are farther and farther away. So, earnings haven't been as important, hasn't been the focal point. It's just been growth stocks and interest rates, and they're just overlooking the specifics of the earnings announcement. And I think that's one of the reasons why I think that the options holders around earnings are not doing as well as we've seen in the past, Mark.
Matt, I think I hear the special guest line ringing again. Let's see who else is joining us on this epic 100th episode spectacular.
Special congratulations to the advisor's option on making triple digits. I think it's great that you're promoting options with financial advisors, and wish you lots of success. Congratulations.
A familiar voice indeed. That's our good buddy, Mr. Uncle Mike Tusaw from St. Charles Wealth Management. He was our special guest on the show last episode, and he actually is out there in the trenches as one of the few advisors out there actually using options. So, Matt, it was nice to have him chime in this 100th episode spectacular, sir.
And Mike has been nice enough to host me on some of his other shows on the network, and it was nice to have him on last time. And hopefully he's feeling good about silver.
Yes.
We both share that affinity, and it's a tough affinity to share. But one day people will catch on and see why we like the silvery colored metal so much.
Well, you had your brief moment in the sun there, right? Everyone was trying to squeeze it for about 24 hours. didn't really work out too well, but we had that brief moment of the silver squeeze. But now it is time to keep on rolling into our next segment. It is time to get the buzz.
Busy financial advisors don't have time to follow the latest developments from the options market, so we do it for you. It's time to get the buzz.
All right, buddy, welcome to the buzz. This is the portion of the show where we break down all the trends and developments and stories and big picture items that have occurred in the world of options and indeed related products since our last show that you may have missed. You've been busy dealing with a lot of your clients' questions, I'd imagine. Oh, wait, before we even get to that, Matt, I think I hear the special guest line ringing again, and this time it sounds like a very familiar voice.
Mark, congratulations on your 100th episode. Keep managing those net units. From Chris, a.k.a. the Director of Risk and Swan Global Investments.
There we go, our good buddy, the Director of Risk, Mr. Matt. We miss him here on the show week after week and month after month. I know they're busy cooking up some cool new stuff over there at Swan. They'll be back in the future over here. But fun stuff here, Mr. Matt, to hear from the Director of Risk again, sir.
Yeah, Chris and I are brothers from a different mother. We follow the same outlook. I mean, just right there in his very terse statement, he mentioned units. I always watch units, as a past market maker and just someone that invests money. You really have to watch what he's talking about. And just so everyone knows what units are net long options or stock if it's going, if you're looking to the upside, it's net long call or a long stock. And if you're looking at the downside, you want to be net long units. That's either a long put or a short stock. And when he says net, you could be long a call and short a call. That's flat at least, and same on the downside. So that's what he means, and those are words to live by, Mark.
They are indeed. If you want to keep living in these markets, no short units, a good one to live by. Matt, I thought we'd have a break, a respite from the crypto talk. I know you've even become a little bit inured to it of late, but it is inescapable these days. Since our last show, some of the biggest headlines have been in that section of the market. First off, of course, the combining like Voltron of the two hottest, most hyped / overhyped names in the market. Bitcoin and Tesla got together when Musk announced they had bought $1.5 billion worth of Bitcoin. That sent both of them skyrocketing to new levels. They have since come off those levels. And for a brief period there, Matt, we were joking on our Crypto Rundown show about a month and change ago, not too long ago. Oh, what would happen? Can Bitcoin ever really make the 1 trillion market cap level? In fact, we even put a poll out about that exact thing. We said, what will hit the mythical 1T market cap level first, Tesla or Bitcoin? About 2/3 of our audience voted Tesla. They had no idea that they were going to kind of come together in that conversation. But Bitcoin did the dance first. Not that long after our last show, about a week and change, Matt, we saw Bitcoin crossing the 1 trillion threshold. Now we have this weird phenomenon where advisors in the past probably were maybe dismissive of this. They didn't really understand the asset. They didn't like it. It didn't have any real fundamental value or an earning stream you can analyze, kind of like a stock. It was its own strange esoteric beast. But I have to imagine now, Matt, that given that Bitcoin has just reached this new level of prominence, this new level of market cap, obviously it didn't sustain 1 trillion for very long, but it got up there ever so briefly. So I'm curious, what are your thoughts on this continued explosion of crypto madness and what it means, if anything, for the advisors listening to this show, sir?
Well, I've been in an interesting seat to watch Bitcoin. I used to speak about peaceful parenting at these conferences that would often have Bitcoin in, I wouldn't even say investors, miners. And they would try to explain it to me, and I just didn't get it. I listened and didn't get it. Finally, I did buy a little bit just to shut them up more than anything. And I figure, I will have, I kind of follow the permanent portfolio method for investing. So you put a certain percentage in the market, you put a certain percentage in gold, bonds, cash, and now what the heck, in some crypto. You never know when you're going, there's a lot of benefits to it. Obviously there are some great risks and some great volatility, but there's also, portability, and, it's something that could only get so big. And so there's scarcity, and then there's also, it's just a meme. I mean, as people learn about it, they buy it. And so, it's catching on. So that's my seat. So I've seen it for a long time. And, I've always expressed my ambivalence towards it. I like it for a lot of things, and I don't like it for a lot of other things. But it's been phenomenal to watch. And now it seems like, people are catching on, and that's what has to drive it. You get the some of these companies wanting it for part of their assets that they're holding. Of course, Overstock started one of the first, if I'm recalling correctly, where they would take Bitcoin. Now, some people are not only taking Bitcoin but holding it on their balance sheet, which is seems so odd to me for watching it so long. But that's the adoption point. And so it's difficult, and there are also other issues with it. There's this, I don't know if you've gone into it in other places, but there's this financing vehicle called Tether that some people have raised red flags about, and I can't go into it here, but I would invite you to look that up on the internet. So there are a lot of great things about Bitcoin, but there's also some things that I think are red flags. So it's just been interesting to watch and participate in a small way. And now as people start to discover it, and including firms and at least it's not Dogecoin. It's Bitcoin. So Mark,
there we go. There we go. It's much better. It's not about a dog and an internet meme at the end of the day. Matt, I think I do hear our special guest line. Everyone wants to be a part of the 100th episode spectacular. I think we got another familiar voice chiming in here.
Hey, Mark. I just want to wish you all the best for continued success. Wow, 100 episodes. Unbelievable if we go back past a decade and think about the Advisors Option Program. You've really done an incredible thing, kind of elevating the education and the outreach to the advisor community about options with all of your guests and the leading people who are in the industry. And I just know that you're going to be continuing this great outreach for the next 200, 300, 400 shows. So I appreciate you having me in the past and only wish you much success. Thanks again.
That was our good buddy, Mr. Eric Cott, until very recently, Director of Advisor Education over there at OIC. We miss him dearly, but glad to hear he's doing well over this. There you go. Mr. Matt, we have our old buddy, Mr. Cott, chiming in as well, sir.
Eric is so great, and it was so nice to have him on the show. So much energy and so much love for everyone that's around him. He's going to do great. He's been such a supporter of ours over at ORATS and of advisors and of the show. So it's great to hear from Eric.
A good one. We got more people champing at the bit to get on the program here. Before we do that, before we move on to the buzz, maybe some less exciting news coming out of the SEC these days, particularly for the audience of this program, Matt. Of course, we have a new administration in there down in Washington. Whenever that happens, priorities tend to shift, priorities tend to change. And it sounds like under the Biden administration, the SEC is going to bring what they call, quote, a heightened level of enforcement activity, but also going to shift their focus. So they're not going to bring that enforcement activity to retail investors and securities offering frauds, and instead place what they term a, quote, increased emphasis on the conduct of institutional market participants, investment advisors, and broker dealers, as well as public company accounting, financial reporting, and disclosure. So it sounds like, Mr. Matt, maybe the next 4 years for this audience might be a little bit more turbulent, at least from a enforcement perspective, sir. What are your thoughts?
Yeah, I mean, the Democrats have shown that they're going to look more at protecting the little person, so to speak, and that often is going after the bigger people, so to speak. So, is it what's going to be different? It's hard to say, but from my perspective, there are some things that need to be looked at. I don't know if you've seen this, but is it Michael Bolton? Is that the singer? He did a parody of payment for order flow.
No, I haven't seen that.
Oh yeah. So again, another something for your listeners to search. There are quite a few things that that could warrant a closer look by the SEC. And administrations come and administrations go. The market goes on, Mark. So 100 episodes go through many different administrations. So we've seen quite a bit, and we'll get through this, and we'll get through the next ones after this.
Well, you set a new record, sir. I don't believe in this 100 episodes. I do believe that is the first time anyone has invoked Michael Bolton on this program. So I will have to check that out. Michael Bolton, payment for order flow. Talk about wonky and in the weeds. Yet suddenly in the wake of GameStop, even wonky topics like payment for order flow are suddenly hot and contentious out there. You know what else are hot, Matt? Are these freaking options things we like talking about all the time. Right after the heels of our last show, the numbers for January came in from our friends over there at OCC. We just heard from their CEO a little bit earlier in the program. January volume at OCC up 61.7%, listeners, from a year ago. So one of the narratives going into the end of the year of 2020, Matt, was, hey, this is a bonkers blockbuster year. It was a record year from any perspective. They had already beat the previous record, which was 2018. In and of itself, a crazy year. Remember back to 2018, listeners, we had Volmageddon, XIB imploded, a bunch of other crazy things happened that year. That set a record level. 2020 was about 50% beyond that. They beat 2018 by September. That's how active 2020 was. So everyone thought, okay, things probably going to slow down after this. I mean, December was the busiest year in the history of the business up until that point. Well, January said, yeah, you know what? Hold my beer. Here we go. Because January blew the doors off, up 61.7%, the highest volume, busiest month ever in the history of the options market. So right after December set the record, January came in and just kicked it right to the curb, because January is now the big dog out there. Total exchange listed options volume at OCC, 838.3 million contracts. Equity options, 800 million of that. You got cleared ETF volume up of 216 million. That's a piece of that, obviously. Index options, the only dark spot was index options, 12.4% decrease to 38 million in January. So that's one area where, for whatever reason, the indexes can't really catch fire out there. But Matt, January was a record. February, given what we've seen just in the last few sessions, may be starting to threaten that as well. So I think everyone thought coming into 2021, this would be a little bit quieter year. And yet so far, it's matching 2020 blow for blow, if not exceeding it, sir.
There's always something, right? There's a little thing called GameStop in January. And, they are talking about options on Wall Street Bets. Wall Street Bets went from 2 million people following it to 9.5 million, and who knows what it is now. So people are hearing about options. People are YOLOing. You only live once. And, a lot of people are trading. That's leading to more trading from institutions, from firms. Again, as people learn about options, they're going to trade it, and they're going to trade it in their firms. So, yes, it was a crazy year. There was, short squeezes. Options were in the market. There was a lot going on. When people are making money, when the market's going up, there tends to be more trading. But I mean, Mark, this is crazy stuff. I mean, we're, at ORATS, we get, so much from just from individuals, and they want to, but the people that we see are normally ones that are looking for data, looking for tools, looking for whatever to trade. We want to help people stay solvent, trade responsibly, and use data, test, paper trade. You don't often see that like on the gamification of trading. I think that happened a lot in January. I think in order for people to really survive and thrive in the option market, they're going to need some more tools. They're going to need some more data. They're going to need some more educational platforms like this. But I think January was just wow, just so many people coming in, so many people not wanting to miss out of a opportunity, and we saw it in the trading volumes, Mark.
And Matt, while you were talking, our crack producer managed to track down this Michael Bolton video you mentioned here. Apparently, this was done by it was a commercial from the rival to Robinhood, another kind of online free brokerage. So they paid Michael Bolton to do a parody of his Grammy-winning 1989 hit, How Am I Supposed to Live Without You? Where he instead tweaks it to be about PFOB. He said, I could hardly believe it. What I saw on Reddit today, was hoping I could get it straight from you. They told me about order flow. So I Googled, now I know. Think I got to find somebody new. Those are the lyrics, such as they are. And he goes on to say, so tell me about it. Tell me who you sell my trades to. Man, Matt, what a world we live in. Years ago, just to give you some frame of reference, listeners, over a decade ago, we decided on this network, this topic was old even then, payment for order flow. And we decided this is so wonky, this is so in the weeds. Unless something crazy or new happens, we're going to kibosh all discussions of payment for order flow because it didn't seem like it was going anywhere. The SEC had decided to wash their hands of it. So that was kind of the way of the world, talking about it endlessly over and over again. It really was mostly too wonky for a lot of your retail folks and the industry folks who listen. They already knew about it. So it was kind of a dead topic. And yet, Matt, we have now reached this world, this tipping point where things like Melvin Capital and Citadel are trending on Twitter, names most people never would have heard of in a million years unless you're in the business. And now maybe this is the apex. So this kind of has to be. Michael Bolton is parodying payment for order flow. Matt, what world are we living in?
Well, we always say that it can't get crazier, and what happens? It does. So I'm not even going to say that. I'm going to say what is coming next. When Michael Bolton sings about order flow, I'm just expecting something else, and I don't even know what that can be, Mark.
Well, I do know what's coming next. It's yet another special guest star on this 100th episode spectacular of The Advisor's Option.
100 years. Congratulations on your 100th year of The Options Advisor. 100 episodes. That's fantastic as well. Probably more fantastic since if you'd been doing this for 100 years, nobody would have known what an option was for 60 years of it. But in all seriousness, congratulations to the Options Insider Network for the 100th episode. Advisors are a key area within our industry, and making sure they understand how to use options correctly and for the benefit of their clients is very important. And I'm just very proud to be associated with a network that has taken that on and done such a great job with it.
That's our good buddy, the once and future Dr. VIX, a.k.a. Mr. Russell Rhodes. A lot of people think he's only talks about volatility. He does talk about volatility, but also, you may remember, he recently wrote a book about this entire segment of the market, about how advisors should use options. So he very much has some skin in the game. There you go, Matt, yet another of the many special guest stars joining you on the program today, sir.
Well, he also could have been a stand-up comedian. So, I mean...
Yes, a deeply funny fellow.
What else does he not do? So, yeah, Russell, known him for a long time, just knows so much and is funny. So what else do you want?
What else do you want? Probably you want us to answer some of your questions. So without further ado, let's open up our office hours.
It's time to answer your pressing questions about options. It's time to start our office hours. You can become a part of this segment by leaving a question on theoptionsinsider.com, emailing us at questions@theoptionsinsider.com, or via social media at twitter.com/options, facebook.com/theoptionsinsider, or stocktwits.com/optionsinsider.
All right, welcome to the office hours. On our last episode, we were in the middle, the teeth of the GameStop short squeeze frenzy. I say that now, but it seems like we're in wave 2 of that right now, with GameStop exploding all over the place and a lot of the meme stocks having a second wave of enthusiasm. So perhaps it's not all behind us yet, but we asked you this during the show last time here, so let's pay it off now. We asked you guys, are you guys trading options on the current short squeeze frenzy in names like Game, AMC, Bed Bath & Beyond, etc.? And if so, what strategies are you using? We gave you 4 choices. Buying calls /spread/flies, so obviously upside verticals. Buying puts /spread/flies, so downside verticals and ratios. Selling puts /spreads/flies, easy for me to say, or other. And Matt, our audience, I guess they were feeling the love because they were overwhelmingly about 60% saying they were buying calls /spreads/flies. Only 19% saying they were buying puts or spreads or flies to the downside. Only 17% says they were selling premium, selling puts, and then 4% said other. We got some interesting write-ins. So, Matt, sounds like the audience in the network there was maybe buying into the squeeze a little bit.
Yeah, it's a funny thing. I actually wrote an article on our blog about how finally later in the cycle, the GameStop puts were in demand, and after the initial squeeze going on. We saw, a lot of puts trading, but yeah, it definitely began with the calls. I've been seeing a lot more on dealer gamma and predicting dealer gamma. So just so your audience knows what that means is, when someone buys or sells an option, they do it to open, and then the market maker theoretically has the other side of it. So what people have been doing is trying to predict what position the market maker has in a particular stock. And the reason that that's important is if they're in a long gamma segment of the market maker's position, if the stock is within that area, it typically has a dampening effect on volatility, because as the market goes down, the market maker will need to buy because he's getting shorter, and if the market goes up, he'll need to sell because he's getting longer. Typically, market makers hedge and the holders of options don't hedge. So that's the whole concept there. So what was happening in GameStop is they were buying all these upside calls, and then as the stock went through there, market makers were forced to buy to cover their delta, and it just accelerated the move. And then once the market turned, they had to then sell as it went through the strikes the other way. So what happens is it creates a lot of volatility. So you'll see, I think, often these short squeezes will start with calls, but then institutions and maybe even people protecting it often turns to trading puts. So it'd be interesting to see if some of these people will trade to put strategies later in the cycle, Mark.
Yeah, we had a listener get caught up in some of that put excitement and trade some puts on GameStop, thinking that they were going to be cash settled and not really understanding the exercise and settlement process on equity options. And so had a little bit of a nasty surprise waiting for him when he was short some shares of GameStop the following Monday. So yeah, some folks did switch to the dark side and had interesting results out here. Speaking of interesting, this comment came in on a recent episode, Matt. This comes from frequent listener Scott Sommer. Looks like it might have come in on YouTube. A lot of people like to listen to the show on YouTube. Hey, wherever you want to get it, it's on pretty much every platform under the sun. Amazon Music added it recently, so it's pretty much anywhere you get audio, this show is available. Scott chimed in, Matt, with I like the build your own P&L graph concept, and he tagged you guys in it. Is this something you guys are putting out over there at Oratz Land, sir?
Yeah, so we are coming out with a platform that you could really analyze what your payoff picture looks like, and not only that, then put all your positions in terms of like the SPY, and so you could see what your overall payoff graph is. So what that's important for is just to look at your overall risk. You don't want to have it so at the left side or the right side the simulated profit is beyond what you want to be, putting out there. So you can then, put on other positions. And one of the ways, I like to trade is to, back test, to look at triggers in order to time a strategy, to put on a strategy, and then put on other strategies, but always looking at the overall, what's my overall risk look like? Obviously I like to have puts and units, as we talked about before, but then, selling a put spread, then how does that affect my payout picture. So my expectations of my profitability of something like this, down 3% yesterday happens. Is it within my expectations? So yeah, I appreciate Scott's comment. You want to, devise your look of your portfolio, based on your outlook on the market and your investment objectives, Mark.
All right, Matt, we obviously get a flood of questions here on the network and indeed on this program. This one I had to make sure we saved for you. This comes in from Jackson Ballard. It says, hi. Well, hello, Jackson. It says, thanks for all the great content. Your expertise and information is far more impactful than any other podcast available. Well, thank you very much, Jackson, and everyone else who takes the time to write in and also rate and review us on all those platforms out there. It does help keep the new folks discovering the shows. He says, I have a question I'd appreciate if you could address on one of your coming shows. I've been trading calendar spreads, mostly around earnings, for years. Obviously, to take advantage of the vol differential between the front and back weeks. For planning purposes ahead of trades, what is the best way to anticipate where the volatility will land after earnings is reported? Or perhaps the best question may be as simple as, what is the best strategy to know when to close calendar spreads? Thank you again, Jackson from Washington. Matt, this obviously, this touches on several elements where you guys are pretty active. Obviously, you guys are the keepers of the earnings data, first and foremost over there, Oratz. And also, as part of that earnings data, listeners may not have seen it, but you guys also do predict the expected earnings crush, or I should say volatility crush, or vol change, really, after the announcements. Maybe you could shed a little bit of light on how you guys do that for Jackson. And also, what are your thoughts on, through your various P&L calculations and back tests over the years, the best way to set up those calendars around earnings, sir? Lot to unpack there.
Yeah, that's a very good question. So there's a technique that you can do to look at the term structure, meaning the at-the-money volatilities for all the expirations of a particular stock. Then you identify when the earnings is, and so the earnings month directly after the earnings announcement will be the first one that you'll need to adjust, and then you adjust it with a formula. It's available online, but and that adjustment then continues on all the other expirations that are after that, and then what you'll find is there are even some expirations that have 2 and 3 earnings embedded in them. So what we do is we have a formula that will adjust each one of those expiration down to what we call a rational skew. So a rational skew is a non-arbitrageable by calendar spread skew. So you want to have, so you could take out volatility from these earnings months, and then you draw your rational skew, and that is the area that, and one of the best predictors of where the volatility will be after earnings. Now, sometimes if it's a really big move to the downside, it's going to be higher. If it's a small move to the upside, it'll be lower. But that's generally been one of the best ways to predict where earnings will be, is simply to take out the earnings effect, as we call it. And we have we do that, in real time at ORATS. So you can, it's in our API, and you could see it historically as well. So that's the first part of Jackson's question. Great question. So, and again, it's on the earnings reports that we put out daily, and then you guys post, I think every other day or every third day or something. So there's where we think volatility might fall to after earnings. So the second part of the question is, or what are the best strategies? And so yes, we have a back tester that you can simulate getting in a certain amount of days before, getting out a certain amount of days after. And it's a little too complex to say what the best strategy is now, but the procedure that we use is we have this backtest optimization feature where we look at many different combinations, thousands of combinations, and then we simulate trading, calendar spreads, iron butterflies, all these different types of strategies, and then you come up with strategies that tend to outperform. And, you know, it might outperform in certain times, might outperform in certain stock types. You know, there are stocks that move a lot during earnings, and we, you know, keep all that data, and that's all in our API as well. So it's a bigger question than we can answer here, but there are techniques to test all these types of earning strategies, and any strategies for that matter. But and test these strategies not only you know, on many stocks, but many similar types of stocks. So you could combine stocks together that might move similarly, and then be able to analyze very many different earning scenarios and what is the best. If someone were to ask me what is the best strategy, I wouldn't tell them the best strategy. I'd tell them that's the method I would use to find the best strategy, Mark.
How did I know that question would resonate with you, sir? I had a feeling. This came in, I was like, we can't answer on any other show. We got to save that for Matt. This is all of his wheelhouses in one question. But that music, Matt, unfortunately means we've come to the end of the fastest hour in the business. But before we go, Matt, there's yet another special guest star who wants to join us here on the 100th episode spectacular. Let's see who we've got.
Congratulations, Options Insider Radio Network, on recording your 100th episode of The Advisor's Option. Mark and Gene, your continued devotion to educating investors on the positive use cases of options has really propelled the industry forward. And I look forward to hearing another 100 episodes of Mark and Matt's witty banter. This is John Cherry, Northern Trust Capital Markets.
Well, there you have it. Our old buddy, Mr. John Cherry, chiming in as well. Couldn't get 100th episode in without him chiming in there, Mr. Matt.
You know, the people that you have, I'd love to have them all at the same place and be talking to them all. It would be what a great night. You roped in some of the best in the industry, Mark.
Well, they knew you were on the show, Matt, so they could not say no. But this was a fun one. I appreciate everyone who took the time to join us here virtually as a part of the show, of course. In our listening audience, everyone listening after the fact. We love all you folks, too, as well as everyone who took the time to write in with such great... It's like Jackson wrote a question just for you, Matt. But everyone out there, Jackson, Scott, everyone else takes the time. We could do, again, dozens of questions. If you send questions into the show's only once a month, so sometimes we rotate them to other programs to make sure you get answered in a timely fashion. But some that are uniquely situated and suited, we save them for the old AO show. But before we go, Mr. Matt, if folks are interested, they want to check out any of the stuff you just talked about. By the way, I love that term, rational skew. That's a great one. We can talk about that in another program as well. But if folks want to check out your back tests, your earnings reports, any of the stuff you guys have cooking in the land of ORATs, where should they go? What should they do, sir?
Yeah, you're right. These questions are great, and we get so many good comments. That's why I give out my email at matt@orats.com. You know, a lot of what we hear about, you know, we can make the tools. We have such a great development environment here at ORATS and great guys here. You know, we're building, you know, more optimizing back tests, and we're looking at triggers to find when the best time is to trade certain strategies, and a platform to help manage it. And Scott asked about, you know, build your P&L. We have P&L management as well. So, yeah, we're at orats.com, and you know, come on over, continue the learning process over at ORATS, and check out which tools that we have to help you out, Mark.
And you guys know where to go for all the information. You heard from their CEO of the OCC at the top of the show there. Where to go for more information, what they have to offer, just go to optionseducation.org. That's their educational arm. That's the arm of the OIC. That's what Eric and Alan and everyone else were involved with over the years. That's a great place to go, particularly for the audience of this program. They have a great advisors tab there. You can sign in and get access to a whole bunch of great data, the Cerulli studies, everything else. If you have questions, they probably have the answer, optionseducation.org. And on behalf of Matt and everybody over there in ORATS land, and John Davis and everybody over there at OCC/OIC land, and indeed myself, I want to thank everyone, again, took the time to join us today virtually in the audience after the fact. We love you all. And we'll see you back here next week for, of course, kicking all off on the network again on Monday with the option block. And then all the way throughout the week to another episode of The Advisor's Option.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.